All right. What is up, traders? What's up, tycoons? Super excited for today's video. We got to give you an update before earnings on SoFi. Okay. SoFi is actually set to start earnings and report earnings here soon. So we're going to give an update on the stock. All right. We're also going to go into why the student loan decision didn't lift SoFi stock and why that's okay. There's a nice article written by the Investor Place we're going to dive into on today's video. All right. We're also going to use today's sponsor, Simply Wall Street, to use their platform to dive into the stock a little bit more. It's a really great platform. They have an awesome app and website that gives you some really good analysis on any stock that you guys would like to look up. So we'll do that and we'll take a look at some of the new features, such as the revenue and expenses breakdown. I really like this a lot. This is in the beta phase. So they're still getting this going, but really great stuff there. And we'll take a look at their future growth a little bit. Okay. That's one of the reasons why a lot of people are interested in SoFi is because they think they have a lot of growth in the future potentially. Now, we're also going to break down the daily chart time frame and give you guys an update on the analysis that I'm looking at. We're going to go over some of the key levels here that I'm watching, as well as something you guys need to be cautious of and aware of. This gap down right here. We'll go over why that's important, as well as taking a look at our MACD and our RSI. The RSI is a leading indicator and the MACD is a lagging indicator. So I like to combine these two so that way I can use a leading and a lagging as confirmation on my analysis. All right, we're going to break that down really nicely for you guys. So make sure to stay tuned to the end. That way you guys get the technical analysis. You can always email me as well for a one-on-one personal session at zachleytrades@gmail.com. If you guys are ever interested in a one-on-one session, just feel free to shoot me an email and we'll work on scheduling a time that works for both of us. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now, let's dive into why the student loan decision didn't lift SoFi stock and why that's okay, because this is something that a lot of people were really thinking about and thinking that would be a huge catalyst for SoFi, right? Basically they keep getting held back by the student loans, essentially being delayed, right? And that loan forgiveness and different things like that. Well, we'll dive into the article now. So it's probably not every day that a decision from the Supreme Court of the United States affects your investment decisions. However, the Supreme Court's recent ruling on student loan repayments is certainly relevant to SoFi Technologies stock. It might seem counterintuitive that the SoFi Technologies share price declined despite an ostensibly favorable Supreme Court ruling. Still, when we look at the factors involved, we can understand that the market's response and then make an informed decision as financial traders. Not long ago, I recommended waiting for SoFi stock to pull back to $6 before considering a long position. Today, I'm standing by that strategy in light of a major high court decision. So let's delve into the details and determine how all of this might affect SoFi Technologies. But remember, I didn't write this article. This is from Investor Place. So whenever it's saying I recommended, it's the writer. Okay. Now, a signal event for borrowers and for SoFi. So here's the scoop: around 44 million people have federal student loans in the U.S. that are expected to repay. Now, for many months now, there's been a huge tug of war on Capitol Hill and in the courts as to whether that repayment requirement should be paused or even completely eliminated / forgiven. Now, here's a major wrinkle in that story. The Supreme Court just blocked the Biden administration's plan to authorize federal student loan forgiveness. It's hard to know what will happen next, but the Biden administration may have few options at this point. After all, there's no higher U.S. court than the Supreme Court. On the face of it, this is great news for SoFi. That's because SoFi generates some of its revenue from helping students refinance their loans. Thus, the pause on required federal student loan repayments was a serious problem for SoFi. Shockingly, SoFi's first quarter 2023 student loan origination volume plummeted 47% year over year. Why SoFi stock fell despite the Supreme Court's ruling. So let's back up for a little bit. So prior to the Supreme Court decision, SoFi stock had already rallied from $5 to $9 in a matter of weeks. This prompted Compass Point's research analysts to describe the stock's stunning performance as overdone, right? And I fully agree with that assessment. and his no baloney explanation of how the end of the student loan repayment pause was already priced in. The student loan moratorium was already scheduled to end on June 30th, with repayments resuming 60 days later. Recent events are unlikely to have a material impact on that timeline and the recovery, refinance, or origination volumes. Now, JP Morgan analysts echoed this sentiment, asserting that the underlying financial impact of the Supreme Court's ruling on SoFi Technologies is fairly insignificant. And he suggested that just a fraction of borrowers would actually refinance with a private lender like SoFi. Now, surely the market understood Smith's finding that very few people will actually refinance their student loan debt with private lenders, and this helps to explain why SoFi stock fell after the Supreme Court's ruling. The end of the student loan repayment requirement pause was already priced in, and its impact on SoFi Technologies probably won't be as great as some overeager bulls assumed it would be. Patience will pay with SoFi stock. Now, I do want to quickly add in that there's a lot of people like myself, okay, and I have student loan debt from college and stuff. um when COVID happened, they paused all of that debt, and so I haven't even had to start repaying any of my student loan debt. So me personally, I probably am going to reach out to SoFi if there's not that loan forgiveness and such. I will be looking out, and I like the stock, I like the platform, I've had the app, I've had the platform for a while. It's a really great platform. I definitely recommend you guys checking it out and just seeing if it's something that you guys would be interested in. But I'm going to try to help the stock out a little bit and probably refinance my student loans through them. Now, hopefully you've been sitting on the sidelines like I previously recommended. I'm still bullish on SoFi Technologies for the long term, but the share price got ahead of itself in May and June. So just relax and be patient. Let events play out as they will. SoFi is a disruptive neobank with a great deal of potential. However, timing is crucial for financial traders. Therefore, I still believe it's wise to wait for SoFi stock to pull back to $6. Then, if you're ready and the narrative hasn't changed drastically, you can scale into a share position. Now, let's look a little bit further at it. All right. And if we look at the 7-day returns, all right, for SoFi, it's down about 3.5%. But on the year, it's up a massive 30%. Okay. Now, this has outperformed and exceeded the US consumer finance industry, which returned 7.1% over the past year. And it's also exceeded the US market, which returned 10.5% over the past year. Now, SoFi is more volatile than 75% of US stocks over the past 3 months, typically moving up or down 10% a week. And you can see that, it's higher than the industry average volatility and the average market volatility as a whole. So SoFi is a very volatile stock. I love volatility. As a trader, volatility is exactly what you want, right? You can't really make good trades on something that's not volatile and that's just staying within the same price levels, right? So for me, I really like trading SoFi a lot. It's one of my favorites. We'll dive into it a little bit more. All right. If you take a look, I mentioned Simply Wall Street Now has this really cool revenue and expenses breakdown. You guys can pause the video, take a screenshot to dive a little bit further into it. But when you take a look, it gives you a nice brief summary here. You can see where they're spending the money at, right? Sales and marketing, there's a lot in there. Okay, 629 million in sales and marketing. It's definitely a pretty penny there. 1.62 billion in expenses overall. And you can see where their money is coming in from. So really nice feature there. Excited to see that roll out and develop more. Now, when you look at the key information, it's got a 64.6% earnings growth rate with a 64.5% EPS growth rate. All right. So that's really nice to see. The revenue growth rate is at 17.1% with its future ROE at 3.8%. It's got good analyst coverage. So, a lot of this is due to the growth, right? The growth story is why a lot of people are interested in SoFi. And if you take a look, Simply Wall Street, it gets a 4 out of 6 on the checks, all right, for the future growth segment. And you can see on their little snowflake analysis that the, future growth is actually the highest part here on the snowflake, okay? The different sectors are value, dividend, health, and the past performance. The future growth is really the strong point here for SoFi. All right. Now, the two areas where it doesn't get a check is going to be high growth revenue and the future ROE. We just broke down the growth revenue. and the ROE, but it's not super high, right? So that's kind of why they get two X's right here. When you look at the revenue versus market, you look at high growth earnings, the earnings versus the market, and the earnings versus the saving rate, gets a very nice check on all of those for SoFi. Now let's dive into the chart here. All right. And that article really highlighted $6 a lot. Okay. So $6 is right here. All right. What I want to do is I want to go and actually dive deeper into the technicals, right? $6 is kind of just a price that they threw out. To me, what we have right here is a nice clean bull flag, right? You have your huge flagpole here, and we're starting to form the flag itself, right? And this is typically a bullish pattern. And if we break out, we could head up towards and up above $11, right? Now, just because we have a bull flag forming doesn't mean we've gotten confirmation. This, the candles can change the structure and this can turn into something completely different very, very soon. So you want to keep that in mind. Now, what I really like about it, okay, is that it's got some room to pull back. All right. 666, 734, and 802 are the three major Fibonacci retracement levels. All right. And you use these levels to identify trend continuation versus trend reversals, right? Because nothing moves in a straight line down and nothing moves in a straight line up. Rather, you get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. So we've had this huge move up, and we really even haven't had a strong retracement, right? We retraced here to the first major retracement level, and we're really just consolidating now right around that level. All right. You can see here in the past, right, when we have the move down, okay, and we retrace up to our 61.8% retracement level, and then we continued that downtrend, right? And even there, you see we move down, we retrace up to the retracement levels, continue the downtrend, and over here, we actually broke through them, right? And so we moved down, we broke through our retracement levels and got a reversal. We put in a high and then a higher high. So that's how you use the fibs, right? Is not only just that trend continuation to the downside or to the upside, but you can also use them to spot a reversal if you break through them, right? So if you move up, retrace, and you start to consolidate and break through those retracement levels, that's how you can spot a potential downside. So for me, 666 is really that line in the sand. If we break below there, then most likely we're going to come down to that $6 price level that the analyst was covering. But more importantly, to me, I think if we break below 666, we're going to come down here to fill this gap on SoFi, which is right around that 550-ish area, a little bit below 550. Okay, right in here. If we do that, we're gonna if we break below our 666 level, I do think that there's a strong chance we come down and fill this gap here. Okay, so definitely want to pay attention to these levels. If we can hold above these levels in the short term, that's when we have the chance of continuing the trend. We do have the bull flag forming right here. If we can break this top trend line, we may be able to see a breakout and a retest of our previous highs around $10. And if we can break through there, then we could potentially head up even higher. So, that's really the main things that I'm looking at. When we look at our RSI right here, all right, we were very, very overbought here recently and continue to go up, continue to go higher into overbought territory. And we've started a pullback. And if we can break this trend line here on the RSI, we could see us go back into that overbought territory. And that would be, showing a lot of strength and most likely showing, a strong move up back towards that 10 or maybe even $11 range. All right. What's also pretty significant right here is that we've tested this trend line on the RSI a couple times, and we're back here at this trend line. Okay. So, one of these is going to break very, very soon within the next week, right? We're either going to break down, okay, or we're going to break out. So I'm going to be paying, some close attention to SoFi. As we mentioned, it's a very volatile stock. You see price goes up, you see price goes down, price goes up, price goes down. It's very volatile. This is good for traders. You want things that are very volatile because that's going to give you really good opportunities. And there's going to be some good opportunities here in SoFi, either to the long or to the short side. And you just don't want to let your bias get in the way. You want to you want to find the profits on the charts. Okay. And, look for where the profits are, not for what your thesis is and, where you think the price is going to go. Look for what the chart is actually showing you and telling you. Okay, so that's it for SoFi. All right, we broke down some of the fundamentals. We covered some of the news. We looked at the daily chart here. Don't forget to email me for a one-on-one session. If you guys ever want to do a one-on-one personal session, zachleytrades@gmail.com. And don't forget to check out today's sponsor, Simply Wall Street. You'll get a 14-day free trial, as well as up to 40% off for the first 100 people that join. It's a really great platform. They have an awesome website, an awesome app. It's super easy to use, and it dives into the fundamentals. If you're not a pro at fundamental analysis, they have their pros doing the work for you, and you can look up SOFI and dive deeper into the fundamentals of SOFI, as well as look up another stock that you may be interested in. And, maybe you've been wanting to buy a stock for a while and you're wondering whether it's potentially overvalued or undervalued. You can use that platform to really help give you guys an edge in the market. Thanks for watching. Smash the like button and subscribe for more.